Hello, everybody. Ben Hart here, October 7th. We had some difficulty on our weekly recording last week, so thought I'd give you just a quick update on what we saw happening and give you a couple of charts just to see what happened with the week. And so I hope everyone had a great weekend, but here we are. This was a great chart, I think, that popped up on last week for us, was from the Fraser Institute, that workers in Canada in every province earn less than workers in the US. Just as we think about all the things happening in Canada right now, interest rates, markets, mortgage rates, income, where the jobs are being added, I thought this chart was really interesting and jumped out at me when I was looking at some of the potential things that we see happening over the next 12 months in Canada, political change potentially as well. Another chart that had continue to have lots of questions about is what's going to happen in the U.S. And well, the presidential election doesn't mean everything from a perspective of who's going to be the leader in of the free world in the next election. Lots of continued focus on what happens if Trump wins, what happens if Harris wins, getting a lot of attention that way. Actually, there's lots of discussion about the potential tariffs that Trump would put in, when in actual fact, Biden has put in more tariffs than when Trump was in place. So while it may change and things may be a little bit different this time, I don't think it's a giant focus and worry right now. But if Trump wins, this is a great chart from Argus, who's one of our research providers. Chance for a GOP sweep with leading parties in the House and Senate. Certainly this can have major implications if this is how it plays out. With a Harris win, likely things slow down a little bit in Washington, but likely you get more of a lot of the same types of things happening. Want to increase taxes, things like that. That could be detrimental from an economic perspective. These are all election expectations and not necessarily what's going to happen at that time. But obviously, worst case scenario is a contested election, delayed results. I don't anticipate that, but certainly there's lots to pay attention to. What are the implications on the different industries if either two win? But I thought this was a reasonable way to just look at the potential scenarios, what's going to happen there. So last week we saw a couple things come out. We saw a jobs number that was a little bit better than anticipated, and so we had 234,000 jobs added. The one thing that I've continued to talk about and think about is just the number of multiple jobs that are happening. And so you have an all-time high in multiple jobs. So even though we had jobs beat, there's a lot of people doing more than one job to continue to live their same standard of living. So wouldn't read too much into it. It'll be interesting to see how the market digests that this week, but the jobs number was a little bit better than expected. The other piece was inflation. So this is a great chart from Hedge Eye talking about inflation. And so we've seen that rolling number, which is US CPI year over year, and that's what all the headlines are, right? Sometimes you see month over month, but generally it's that 12-month number that the central banks pay most attention to. And so we're in a good spot there in the US right now, under that 2.5 or so. But if you look at cumulative inflation since 2021, that's what people are feeling today. And this is a great, I think, scenario just to look at it and see how things have played out. My other comments over the past couple of weeks is likely that we saw commodities starting to bottom first week of September, and that certainly seems to be playing out that way, which has implications on bonds and commodities and markets and many factors. But I thought this was a great layout on how to think about what's going on there. And just the last piece is around EM equities versus US equities. And so I've been talking about this a little bit more as the US continues to look to cut rates. They have deficit spend for the long foreseeable future unless we get a debt jubilee. Ultimately, we get the US dollar, which I expect to go lower. We saw the Chinese market and economy stimulate with monetary changes, likely fiscal changes to come. And so we see a massive divergence like this. Last time we saw this was kind of 99, and then we had a period of almost 10 years of outperformance for EM. So certainly worth thinking about how to position, where we should be positioned, and this is something I'm thinking about from an asset allocation perspective. So thanks so much everyone for listening, joining us, and we'll be back on track with a weekly for next week. Thanks very much. Take care.